All right, so we're now moved along a bit and we're sort of 3 to 6 months out from buying your first home. It's exciting. So I guess the first thing to do is to check in because you haven't looked at your financial picture for about 6 months. And because you've transitioned really from thinking about buying a home to shopping for a home in the next few months, it's important to get a sense of where your finances are, where they might have changed, and really having a clear picture on what that looks like. So the first thing you want to do is really consolidate your deposit funds, the money that you're going to use to put down to buy your first home. So Nathan, what do you typically see here, and what are some tips that we can sort of do at this point that, you know, you're a few months away, you might have shares, you might have cash, you might be getting a gift from somewhere. What can you do to sort of sort this out?
Yeah, I think the first thing you want to do is move all funds into one account, and the account that the purchase is going to be in. So if it's you and your partner, put it in a joint savings account in both names. If you have money overseas, if you've got money in mum's account, if you've got money anywhere, shares, sell it, move it away, put it in one spot, because at least you know exactly what it's going to be as of now until leading up to this the purchase.
Because it really comes down to all the banks just want to see proof. And in a lot of cases, there's something called genuine savings. So as a first home buyer, the banks may want to see yourself as having genuine savings. And this is basically having savings in your account for at least 3 months. So by having these funds in your account, now that you're sort of 3 to 6 months away from buying, it means when you come around to buying and pulling the trigger, we'll give the bank the statements, and there's not going to be lots of different questions. We're not going to need stat decks and different things. So it's just a matter of just consolidating that deposit into one account and really just making life easier for the future. The next point along is to really get a better sense on how much you can afford. So, you know, like we covered in sort of the intro one, the banks, if you want to do it quickly, there's different online calculators, but if you had no other credit cards, they might lend between 4 to 6 times of your income. So if you're on $100,000, you might be able to roughly borrow $400,000, but that's a bit rough. So now's the time to start talking to a mortgage broker and seeing what we can do in terms of pre-approval.
Yeah, and I mean, you can do a quick calculation over the phone with your mortgage broker, whereby they can give you an estimated range of what you can afford. Now, between one bank and another, we've seen up to $100,000 difference in borrowing capacity. So you'd also be surprised with the differences in the way that the banks sensitize their assessment. So it's great to understand your borrowing capacity at this point in time. Now you're getting a little bit closer. You want to know that you're in a position where you can afford the property that you're going to be looking at.
And so I guess tell me a bit more about that pre-approval process then, Nathan. So, you know, is now the right time to apply for a pre-approval if I'm ready to buy? What does that look like and how long is it valid for?
Yeah, generally pre-approvals last for about 3 months. Some banks a little bit longer. Now, if you're looking to purchase within the next 3 months, it'd be the best time to start talking about getting your pre-approval together. It'll give you confidence around the ability of what you're after, and it'll also shortcut some of the requirements of the banks come when you find the right property. Because the last thing you want to do is find the property of your dreams and then start trying to get your finances sorted, particularly if the bank's not going to be on board with what you're proposing. So the pre-approval cuts out all that legwork, lets you get ahead of the pack, and gives you confidence that you know you can afford what you're after when the time comes.
And I guess probably just touching on this point, Nathan, but is every property okay for banks? So if I was looking at buying, a tiny little loft in Fortitude Valley in Brisbane, because it's cheap, I can buy something for 200 grand there. It's only 40 square meters, but doesn't have a bathroom. Is every property the same? And what sort of stuff you've seen and just mistakes to avoid, I guess, with that?
Yeah, you've got to be careful with the properties you're looking at. And I mean, an experienced mortgage broker can help you through that by keeping the communications open with what you're looking at. It is important to check your particular property that you're after, because not all banks like specific properties. As your example there, Jayden, a small 40 square meter property in the middle of the CBD, that's probably not going to be every bank's cup of tea. So just check it out. Make sure that you've had your mortgage broker look into it before you start to really get your heart set onto it.
And so I guess sticking with the mortgage broker theme, then, now's probably the right time to start learning about finance options. So, I guess a couple of decisions and take us through what the options are. Do you look at fixed or variable? What is it? Offsets? What sort of stuff's important here to think about, Nathan, when you're at this stage of the buying process?
I guess speaking very high level at this stage, if you're looking at fixing in, you'll usually be able to fix your rate in for anywhere from 1 to 5 years is what we're seeing at the moment. Now, fixed rates give great stability. You know exactly what you're in for the period of time that you fix in. Unfortunately, they don't give a lot of flexibility. So that's the trade-off. You get this stability, but not much flexibility. When we say flexibility, in the sense that if you're wanting to make extra repayments and pull those extra repayments out, it's not as easy to do on a fixed rate. When we look at variable, you can set up offset accounts, you can have redraw, you can have 101 different things, far more flexible, far easier. These are the sort of things that you want to have a chat with your mortgage broker. But for now, start to understand the high level overview of what each are, how you might want to work, and then with the help of your broker, you can start to workshop a solution that's going to be right for you.
No, that's perfect. And then I guess touching on something that you spoke about last time, that whole piece on practicing your mortgage repayment. So obviously this is pretty important these days, even more so than it has been in the past. So just walk us through that and what that needs to look like. Because, running numbers is one thing, but actually paying it's another, isn't it?
Yeah, that's right. And we've given the example of having a mortgage repayment of $2,500 a month and what that looks like from an ongoing practice point of view prior to actually getting the property. So it's probably best practice to sit down, look at the repayment, and then start to practice that as an ongoing commitment. Now, there's lots of calculators online you can use to calculate your repayment, and it makes sense to start getting ready for your ongoing commitment.
Another fun part, I guess, it's time to start looking at properties and researching neighborhoods. So any tips on that, or what would you usually suggest with that sort of process, Nathan?
Yeah, I remember when I purchased my first home, I was very broad in what I wanted. One week I was looking at units. The next week I was looking at houses. I was looking 5 kilometers from the city. I was looking 10 kilometers from the city. So I think you've got to really understand which neighborhood you want to be in. What's the suburb you want to be in? Narrow down to 1 or 2 suburbs. Keep specific as to what you want. Understand what type of property you're after. Are you after a unit? Are you after an apartment? Do you want a house? How many bedrooms do you want? The more specific you can get on the neighborhood and the property you're after, the better and easier your researching ability will be on that specific demographic you're after.
And I reckon, in my experience, this is the number one mistake any home buyer makes. It's, the old adage, having a champagne taste but beer budget. So that's why it's important, we've stressed to this point that you really need to know your costs. But firstly, so you need to know, what your budget bracket is. But secondly, you need to stick within that bracket, because, if you can't afford it, you just need to remember that this isn't your forever home, I guess, firstly, that you don't need to be in this place forever. And if you really had your mindset on a certain suburb, for example, if you really wanted to live in Paddington in Brisbane, but you couldn't afford it, the best thing you can do is just look at the next suburb along. And then if you can't afford that, the next suburb along, because you've just got to think that this first home is just a stepping stone. It's not going to be a forever home, but it's more important to get into the market and to look in that rather than trying to get the biggest house on the best street. The last point that we have in this one is something that we actually see people make a lot of mistakes with, and I'll get you to talk a bit more about this, Nathan, is avoiding credit inquiries or job changes in this time, or even holidays. We're seeing a bit at the moment. So why is that, Nathan, that you want to avoid credit inquiries and job changes?
I think it's one of those things, the more credit inquiries you do, the lower and more impact is going to have on your credit file. So the prime example is balance transfer from balance transfer to balance transfer. Every time you apply for that credit card, you are lodging an inquiry on your credit file. This does have a negative impact on your file. So the more credit inquiries you do, the worse that impact it has. So particularly in this lead up, try to avoid unnecessary credit inquiries. I mean, for the pre-approval, that's not going to be a problem. The other thing is job changes. So if you are considering a job change, if you're casual particularly, the banks will want to see more of a history on that. So just be careful with any job changes coming up, because you don't want it to impact your position to be able to lend money. The last one that we have seen a fair bit of is people organizing holidays and just so happen to purchase a property at the same time. I mean, this is something that's quite hard and difficult to navigate around. And if it does happen, it happens. However, try to be aware if you do have a holiday coming up to either purchase on either side of the dates that you're away. The great thing is with purchases in most states, as long as you've got your finances approved, loan contract signed, you don't need to be there for settlement. So just organizing yourself to make sure that everything's all lined up prior to your departure makes a hell of a difference.
So that's it. So 3 to 6 months out, really, it's time to think about getting all your accounts in order, consolidating things, and looking at that pre-approval. So by all means, get in touch with us at huntergalloway.com.au. We'd love to help you out and give you a free information session on that.